Welcome to Rishi Quant Research. Today in this video, we will see what happens when we detect in real time high volume and large body candle. What is generally the price action thereafter? So in this video, as I told you in the introduction, we will see what happens or what is the price action after we detect the large body and high volume candle. For that, we need to define some things beforehand. First, let's first put out the question upfront. So, question is, I'll just zoom this in. Question is, what is price action after large body and high volume candle is observed? For this, some definitions. First, what is high volume candle? Candle, or what is the high volume? Volume is high, or volume is considered for this analysis high if volume is greater than 95th percentile of past volume. Second, what is large body candle? So large body candle is considered candle ratio BTR ratio candle considered candle for which BTR ratio is greater than 95th percentile of past BTR ratio. So again, what is the BTR? BTR is body to range ratio. This you know, body means close, or in this case we will take absolute difference, close minus open. Absolute means whatever the difference, positive or negative, we will remove the sign and take the difference in absolute term, that is positive. Then range is high minus low, this will always be positive. And what we will do, we will try to detect the candles which satisfy these two conditions simultaneously. Third, we will detect instances where these two conditions above are fulfilled simultaneously. Okay, and then we will plot this or mark this on chart and observe the price action thereafter. Okay, so this is the plan. Now little bit about code. If you're not interested in code and just want the results, you can just navigate to the results section. But if you're a data scientist, data analyst, Python coder, I recommend you to stay here a couple of minutes and understand the code. So as usual, what happens after large body and high volume candle is observed? This is where I have downloaded or importing all the raw data. Here I am just renaming the date column, and also understand I will be using 1 day time frame and 365 days and 10 iterations. That means 10 years of past data I will be using. Script here is a reliance. That means daily chart of 10 years past data of reliance is under analysis. Depending on that, we will study. This here I have calculated, added the column of a BTR. This patch of code here I'm adding, as I told you, the difference. We are taking this as an absolute difference. That's why we need to add color to the candle, because BTR will not give us any sign plus or minus. For that sake, we need to add additional column of color of the candle. That's what this patch of code does. Then we have first filter, high volume. I won't use it as a volume change, and high BTR. For this, we are calculating BTR threshold 95th percentile and volume threshold as 95th percentile. Now let me explain to you what 95th percentile is. Okay. So if the volume is greater than 95th percentile of the past volume, that means current volume, if it is in top 5% of the volume so far, then that will satisfy our condition. Same goes for BTR. If current BTR is in top 5% of the past BTR data so far, then again that will satisfy our condition, and this is where our condition is satisfied. This is the column filter 1. We are applying naming the column as filter 1, and we are getting the result. See, BTR greater than BTR threshold, volume greater than VC threshold. If you are a trader and investor, just ignore these syntaxes. If you're a data analyst and data scientist, you will come to know. This right here ensures that yes, this right here is a this right here is a candle, and let me tell you, candle color and yes, this is for our, just for the sake of I think it is again CD. Yes. Okay, no problem. This is for the marking on the plot. Okay. This here patch of code, what it does, it only marks green and red where this condition is satisfied. Otherwise, it just passes. It does not return anything. So that is for this plotting purpose only. Okay. This color here, I've applied this function and made another column of color. This is for plotting purpose only. And this here, it plots the chart. Now let's see. I'll run this code. This is now the result. I'll run this code and we will get the chart. And what the chart will show, it will plot the last 10 years of daily data line chart, and on that data it will mark the dots where these both conditions are satisfied. Along with that, the dots will be green if the candle is green, and the dots will be red if the candles are red. So let me run this code and you will come to know. See, this here is a plot. Yes, this is for Reliance, and as you can see, this is from what, 6th of June 16 data. You can just check right here. Here the you can see the my pointer of my mouse. I'm moving. Just check right here. You will see the date. This here, see, 6th of June is the first date, and what, today, 29th of May is the last date. This is the data. Now from this is for your understanding. See, right here, when you use this in isolation, it will not work. But you try to find setup near this point and you will come to know. More than that, I'll show you, like this dot here. I'll show you this dot here. See, now I'll just mark this so that you will come to know. See, this is kind of slant trend line. The price breaks above this, and this is where our condition satisfied. And see the rally for yourself. Again, after this sell off, here is the rally, this is the breakout, and here is kind of small consolidation at which we are finding this volume and large body conditions satisfied. Then here again, this is a sell off which triggers kind of consolidation. But more than that, I'll show you this on the chart and you will be surprised to see the results. So I delete this. See, these here are the conditions where both conditions are true. See here, filter 1, both conditions. Filter 1s mean where both conditions are true. The body is large along with volume is large. So let's see couple of conditions on the candlestick chart. This is, see, the date 28th May 21. This is Reliance, right? So let's go there. 28th May 21. May 28th. I don't think so. It is, yes, 28th May 21. Array, this is Nifty, sorry. That's why, yes. 28th May 21. See right here, this is the candle. See, 28th May 21. Now, if you just plot a range across this candle by taking high and low of this candle, you can see a beautiful setup. This is a temporary breakout, but the price does the mean reversion. Price gets back to this demand zone. Here again, players start buying, and then with this candle, price takes off. And see the returns. 30% returns. See, this is the most recent in 21. Then 25th May 21, or I'll do this right from, let's do something on 17. Why not? 14th June 17, 14th June 17, June 14th 17. Right here, this is the candle. This right here is the candle, 14th June 17. And see the rally, superb rally. See the returns. See, almost 40%, 46%. Here you would have got 22%. Here you would have got 28%, like that. Okay. Now let's see 27th November 17. 27th November 17. September. It is not November, it is September. 27th September. August, September. Yes. 27th September. See right here. And here I want to tell you something. This here candle is red. So this here is what I want to tell you. It does not matter whether the candle is red or green. It doesn't matter. Okay. Red candle does not necessarily mean the price will break below this range, and green candle does not necessarily mean the price will break above this range. Absolutely not. It does not mean whether the candle is red or green. Just the instance is important. You just plot the range, high and low range of these candles, and trade the breakouts and breakdowns. Doesn't matter whether the candle is red or green. See right here. And here also you will come to know, if we plot 14th June 17 again, you will come to know 14th June 17. We will plot all the, see, these candles, singular candle is confirming the demand zone. These singular candles are confirming the demand zone. Next we have 12th October 17. 12th October 17. September, October, 12th October 17. See, right here. No, said it is not 17. We need 12th October. See right here, this candle. I'll just get this. See, these singular candles are confirming the demand zone for the future price. Singular candles. So when the price falls, these past demand zones will act as a support. We'll take something from 20. Okay. 21st, 31st, 7th April 20. End of, COVID fall. 7th April 20. 20 April and 7, right here, 7th April 20. Did you see this? This singular, you know, touch confirms what I'm saying. This is the fall of COVID from 25th 20 Feb 20, and see the reversal it takes from the past demand zone. This singular candle again confirms the future rally. Breakout of this singular candle, price breaking above this range of this singular candle confirms. Now this is for Reliance. You can, these, take the snapshot of this and you can check this for yourself. Just try to plot these ranges from the start so that you will come to know if the price is reversed or corrected, whether that correction goes to the prior demand zone or not. And even if the prior recent demand zone or nearest demand zone price breaks below that, it will again go to the next demand zone, nearest demand zone. Okay, you can check this for yourself. Let's get another one, Tata Consumers. So see, here are only green candles. These are only green candles which are observed. So 14th August 17, 14th August 17, Tata Consumers. Yes, this is the 14th August 17. So 17 August 14. See, right here. Single candle confirms the future rally with a massive, massive momentum. Single candle. We are always in search of that single instance which will give you a lowest risk to reward ratio. That's what this is about. This is a million dollar setup. Next, we have 6th September 17. See, immediate. And even if it is immediate demand zone, just within a month, within 15 days, it still confirms the valid demand zone. Price reverses, institutions make the positions right here and see the steepness of this rally. Next, recent 14th Jan 20. 14th Jan 20. See right here. 14th Jan 20. This kind of acts as exhaustion candle, and along with that complemented the COVID fall, and the price fell right below, took the support just above the previous demand zone, and it rallied. Next we have 27th October 20. Huh? 27th October 20. Again, see, this is the singular setup or a strategy which will give you that $1 million instance, which will be a multi-bagger setup, which will literally give, give you superb and highest top-notch risk to reward. Just see the rally. Did you see this rally? Yes. So this is what all this video was about. You need to think out of the box. In today's market, conventional setups, conventional chart patterns are not working. You need to use machine learning, you need to use Python, you need to think out of the box and try to answer that singular question, which will answer if you answer will answer all of your questions. So that's it from my side. I'll see you in the next video. If you like the video, please like, share and subscribe. Thank you.